Hello everyone, this is Mingjong. So welcome to this video. In this video, I'm going to run through with you about S&P 500 E-mini futures. I'll run through with you some of the key levels that we need to pay attention to, the bias, and also a potential day trading setup. Alright, so let's just get started. As you can see on this daily chart, S&P 500 futures just dropped by more than 1% in the London session now. I think that's because it just reacts to IMF warning of possible severe global recession due to the COVID-19 situation. And on a yesterday recap, you can see that yesterday we have a very bullish bar and managed to overcome 2800 psychological level and actually close at the high end, which is 2843. So this is a bullish sign. However, having said that, we also need to pay attention to shortening of the trust. It is quite obvious in the H4 time frame, but on a daily time frame here, you can also see this rising wedge in a purple line that I draw up. So a rising wedge by nature is bearish. Alright, so just let's look at H4 time frame. Okay, so what do I mean by the shortening of the trust? As you can see here, this is the low point from 3rd of the April or 4th of the April. As you can see that up wave is getting shorter and shorter. So this is the first up wave and the second up wave, and that is the last up wave or the third up wave from yesterday. So the up wave is getting shorter and so is the distance travel. That's why you will see that it's actually forming a rising wedge. So that means that the bullish momentum is fading, and all we need is excessive supply that will take down the bull. I think so far that we have two scenarios. Although we have a rising wedge, we can't really just consider one scenario. So now the first obvious scenario here is a breakdown of this rising wedge. So should it break down, then I'll expect S&P 500 futures to correct to this level at around 2700 to 2730, which is I think coincides with this up channel that I draw up in green line here. Another possible scenario is should 2800 levels hold, and means that it just start to reverse and just keep trending higher and run into the overbought area as I illustrate here, and break up before it starting any kind of the reaction. So this is another possibility as well. So I think it is better for us to assess both the scenarios so that we are well prepared to trade in either scenario. As a trader, I think this is quite important to always open up our mind to consider either direction so that we can just trade accordingly. So far, I think we haven't seen evidence of excessive supply. That's why I'm still have a bullish mind regarding for S&P 500. I think there is still some room for it to run to around 2850 to 2900, which you can see I draw up levels here. This is the 2900, which is a very obvious resistance level. So I think this is possible. Just keep in mind that even we get a reaction, if the supply is not excessive, I think it's just a normal reaction under an uptrend. So far the bias for me for today is quite neutral. I'm just waiting for ES to resolve it from the rising wedge. Key levels that I'm looking at, obviously the resistance is at the swing high here around 2850. Should it break higher, then it's obviously 2900 or around this area here. So the first support level is at 2800, which is currently at now. As you can see that 2800 is a psychological area, and I think is previously as a resistance, and once it's broke yesterday, now turned into a support area. And should it break, the next support is obviously 2700 to 2730. So these are some of the levels that I'm looking at. So the potential day trading setup that I think we might have or later could be a break of 2800. Then I will be looking at week rally up, and then to trade the reversal down, so that probably it will just retrace to this target here. Another possibility is to initiate long entry. That means that if it's just bounce up from 2800, then I'll just go long. So the time frame that for me to trade is M1, M3, and M5. So usually I look at M3 time frame, so depending how volatile is the market. Alright, that's it for the video, and I hope you enjoyed it. Just click like for this video, and also follow me and subscribe this channel as well, so that you can get instant notification. Alright, I'll talk to you soon. Thank you, and see you later. Bye bye.